Welcome to Mr. Investor Real Estate Dojo. Guys, today's session is about, you negotiated with the seller on a subject to, but the seller tells you that he's going to buy another house and he's going to need a new loan, So now let's talk about one of the side effects of a subject to, or potential side effects of a subject to, that you need to be aware of and be able to explain to the seller, because you have to disclose this to them, When a seller sells a subject to, and if you don't know what a subject to is, refer back to my previous videos. It says what is a subject to, and I explained that in depth, but I'll go ahead and explain to it quickly. A subject to is when a buyer or investor buys a property from a motivated seller, and the motivated seller deeds or conveys or gives the title of the property to the buyer. However, the underlying note or the existing financing from the seller and the lender stays in place. It doesn't get cashed out. What do I mean by that is that the buyer that buys a property never pays the loan off on the seller. All the buyer does is steps into the seller's shoes, gets the deed, and starts making monthly payments to the lender of the seller as if he was the seller. Very simple, guys. This is a very powerful strategy to make a lot of money in America, totally legally, Totally legally. And it happens a lot in commercial aspect, but not a lot in residential, but you could implement it. I've done deals that all day long in subject twos, and I love them, So that's one of my favorite strategies. Alright, guys? And I'll go look at the video about the advantages of a subject to get a little bit more in-depth idea of what the power of subject to, But in this session, this practice, what we're going to be talking about is if you're dealing with a motivated seller and he wants to get a new loan, couple of warnings that you need to let the seller know, If the seller has an FHA loan and you want to buy a subject to and they want to get another loan, FHA, that's not going to work. Let me repeat that. If the seller has a subject to, if the seller has an FHA loan and you're going to buy their property subject to, the seller cannot qualify for another FHA loan. You can only qualify for one FHA loan at a time. So you can't have two FHA loans out there, But that doesn't mean that the seller cannot qualify for a loan. That seller that has a FHA loan could still get a loan, could still get a conventional loan or some other type of loan out there, like owner financing, things of that nature, How can a seller get a conventional loan, and what is a conventional loan? I'll explain that to you a little bit later, But just note that if a buyer has an FHA and they're trying to get another FHA loan, that's not going to work, and you got to let them know, But a lot of motivated sellers are in situations where they're not going to be buying a home anytime soon, So that's something to consider, Now, another thing that you need to know and be able to disclose to the seller, which is very, very important, is that when you buy a property, when I say you as the buyer or you as the buyer investor, when you buy a property subject to, your social is not tied up with a bank or with any note, So if you don't make payments, it doesn't affect your credit. If there's a foreclosure, it doesn't affect your credit, A foreclosure from the lender to the original note holder, But however, when a seller does sell a property subject to, the note, remember, does not get cashed out, so that loan still stays with that seller even though the seller doesn't have the property anymore. So the seller has given the ownership up, but is still responsible for that note, and that's something that's very, very important. That's why I tell you guys, you got to do what you say. So if you make the promise to the seller you're going to make the payments, you better have the money, guys, You got to have the money. You got to do what you say. If you don't have the money, you can do different strategies to save up the money and then do this, So you got to understand that and be able to explain to the seller that, Mr. Seller, when you sell your property this way, whenever you pull your credit, that loan, that mortgage is still going to be under your name, And how long it's going to be under your name depends on what you negotiate. I personally negotiate the whole term of the loan. I don't tell the seller I could cash the loan out in 3 months or 3 years for 6 years, 12 years, because I don't have a crystal ball, and I only want to promise on what I could deliver. And I always like to under promise and over deliver. I don't like to over promise and under deliver, guys. And you should have the same motto. Okay, so I tell the seller, hey, Mr. Seller, I don't know when I'm going to cash out your loan. It might be 3 weeks, it might be 3 months, it might be 3 years, it might be 30 years, or when the loan retires. Okay, what I do make you a promise in writing over and over and over is that I will make the monthly payments month after month, rain or shine, till I do cash out your loan. So I'm not gonna ever let this loan go to default by me not making the payments, okay? So that's what I promise to the seller. So I don't promise that I'm gonna cash out the loan in 3 days or 3 months or 3 years. However, if the seller has significant equity and they're concerned about it, then I will. Okay, I will negotiate if I know that that's what I'm going to do. But if I'm buying a property that has marginal equity, or I don't think it's going to be able to sell fast enough, you know, or I don't want to put the stress on myself or on the seller and not be able to deliver, then I don't negotiate that. So majority of the deals, I don't negotiate that I'm going to cash them out in 3 years or any kind of short term. I tell them I'll make the payments and I want to cash out the loan as soon as possible. Why do I want to cash it out as soon as possible? Why do I want to cash it out as soon as possible? Because my interest and the seller's interests are aligned. I have skin in the game. I put significant money into the property, fixing it up, paying for closing, yada, yada, yada. And so as soon as I cash out the loan is when I make my money, guys. Okay? So, however, I can't lose money to cash out the loan, just like the seller didn't want to, okay? And that's why we bought it subject to some percent of the times. Not always, okay, but some percent of the times. All right? Now I told you the bad news, okay? Now let me tell you the good news, okay? If a seller sells it subject to, there's a very good possibility for them to be able to still get a loan if they're not a deadbeat, okay? What do I mean by if they're not a deadbeat? If they're working, they're paying their bills on time, their water bill, cable, phone, and they're working towards improving their credit, okay? If they have down payment, if their rent-to-debt ratio is correct, they're still able to qualify for other types of loans out there, like a conventional loan, even if they have a FHA, okay? So if a seller, you're talking to a seller and they have a conventional loan, you can still subject to it and they can still qualify for a new loan. If they're having an FHA loan, they can still qualify for a new loan. And the determining factors are their income to debt ratio, their credit, how much money do they have, and are they making their monthly payments on a regular basis, okay? And two things can happen, okay? So a seller sells you the property subject to, 18 months later, 24 months later, they decide, hey, I want to buy a new house, and they go to Wells Fargo, Bank of America, or whatever to get a loan, okay? And two things will happen. Number one thing that will happen is that the borrower tells the lender, hey, I've sold this property, and they call you and you show them the proof that the deed and the contracts and the agreements, and then you also show 12 or 24 months or 18 months, depending how long it's been, check stubs that the buyer investor is making the payments on this mortgage, and it's not the borrower now, okay? So when the borrower goes to the Bank of America to borrow the money, the first thing that can happen is that the lender is going to say, okay, I see the sale, here's the evidence, here's the paycheck stubs, okay, I see that this is really not your liability even though it's on your credit report, okay? And especially since you have good credit or you have low debt, income to debt ratio, yada, 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 we'll go ahead and accept this as not your liability, okay? So the two things you need for this scenario to happen is the agreement that you sold this property, and then proof that you're not making payments and somebody else is making payment, and then that's all you need as the borrower when you go to the lender, okay? Where you get that proof for whoever you sold it to, okay? The property. Now, the other thing that could happen, which is probably 50%, 60% more likely to happen, okay, especially if you don't have a great income and things of that nature, is that the lender is going to say, you know what, I'm going to give you a credit, okay? What do I mean by that, okay? Let's say that I sold my property subject to, and my note or my loan was 100, okay, 100,000, and then 2 years later I go to a lender and I say, hey, I'm now the borrower, say, hey, I want to borrow money, and the lender says, okay, in this scenario too, I'm going to give you some credit for it. And for my $1,000 loan, my monthly payments were only $1,000 a month. So the lender's going to give me credit, but he's not going to give me credit for the whole $1,000 like he did at option number 1, where the lender says, I show them proof, and they accept it and say, this is not your liability. In this case, number 2 scenario, the lender says, hey, you're still reliable for this note, but I'm going to give you credit because I'm going to treat it as a rental property. Okay? And instead of them giving you credit for 100%, they're not going to do that. They're going to maybe give you credit of 70%, 60%. Okay? So let's say they give you credit of 70%. Now, on your liability chart, instead of you're being reliable for you being the borrower, being reliable for $1,000 a month, you're reliable for $300 a month. So see, now your debt to income ratio decreases because your liability goes from $1,000 to $300, which is still a great thing, okay? Because those treated as a rental property, and you're not reliable for the whole liability of that asset. You're reliable for a fraction of it, which is still a great thing. So in a nutshell, if the seller does want to buy a property, they could still qualify depending on different factors, okay? 2 scenarios that could happen is that the borrower goes and asks the lender for the money. The lender accepts that this liability is not with the borrower anymore because the borrower has proven evidence and facts to back up his story. And so the lender allows that $1,000 liability to be scratched out. Option 2 that can happen or may happen is that the lender says, hey buddy, I see this proof and I don't agree, with it maybe, and what I'm going to do is give you credit as a rental property. Instead of you being reliable 100% for this liability of $1,000 a month, I'm going to give you 70% credit, so your liability is going to be $300. Even though you're not paying the $300, somebody else is paying for it, but now you're only reliable for $300, which is a way better deal than $1,000. Okay, guys. So those are a couple of things that can happen. Now, if the buyer or the seller that you bought the property to, subject to, is a deadbeat, they don't have no money, they don't have no credit, they don't pay their bills, and then of course they're not going to ever qualify for a loan, guys. Now I can't say never, 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 because if you remember 2004, 2005, if you fogged up a mirror, they'll lend you money. They'll lend you money with no doc. So you can't never say never. I can't forecast the future. I don't have a crystal ball, and that's why I don't promise the seller anything besides what I could control, and I can only control to make the monthly payments, okay, on their property when I buy a subject to. Alright guys, so we talked about subject to and what happens if the seller wants to buy another property. Just remember that if the seller has an FHA, they cannot get another FHA. That doesn't mean that they can't get another loan. They can get a conventional loan. So now let me talk about the 2 types of loans there are, okay? There's 2 types of loans. I mean, there's more types of loans out there, but I'm just going to summarize and give you guys the crash course. My job is to give you the core information for you guys to go do deals. And when you go do deals, you're going to come back and ask me questions about the nuts and bolts, and I'm going to be able to zoom in. If I start zooming in and it's just going to be a classroom lecture, and this is not what this is. This is a dojo, guys. I show you the moves, you guys go practice it, okay? I believe you learn through practice. I believe you learn through action. I don't believe just sitting in a classroom all day long and taking notes has a lot of, good things to do. And sure, you get a master's degree or a PhD, but, I know a lot of people that have master's degree are unemployed. I know a lot of people that have master's degrees and they earn a lot less than people with high school degrees. So it's really not about the level of education you have mastered. It's about how much action you can put in, which helps you become a master, okay? Because the more time you're practicing, the faster you're able to remember those moves without thinking about it. So when you get in a situation, boom, you already know what to do because you've done it so many times, okay? And that's what martial arts is about, okay? About practicing so much that it becomes first nature to you. You don't have to think about it, okay? Because this business is just like martial art. This business is just like working out, okay? There's a lot of problems and you have to solve these problems, and the better you are at solving problems, the more money or reward you're going to make. I don't care if you're trying to have a financial success, or if you're trying to have personal relationship success, or if you're trying to better yourself, okay? Life is hard, guys, as Les Brown says, you just got to go harder and stop crying and complaining. Let's focus on what your goals are, what you want to get out of life, okay? So let me just get off subject and jump back into the two types of loans out there, okay? Remember, there's more, but I'm just trying to simplify it for you guys to be able to take action, okay? Just remember there's the FHA / VA, okay? This is for the vets, and basically these are like government-backed guaranteed loans. So I'm just gonna put gov loans, okay? What does that mean? What that means is that when you go to mortgage company, Bank of America, Wells Fargo, Chase, if you get an FHA loan, the government actually guarantees these loans to the banks. The bank is taking very small amount of risk, okay? So because the government is backing it up, okay? So there's low risk for the government. For the banks, okay? Because the government is backing it up. And FHA loans has a very low down payment, okay? Anywhere from 3 to 5%. I've seen them demanding more, and it's probably going to go up, which is not a bad thing. Okay, all right. The second type of loan is a conventional. All right, a conventional loan is one that is not insured by the federal government. What that means is the bank actually has a skin in the game, so the bank's going to do more due diligence and make sure you really qualify, because there's no way to bail them out. And they're like us now. They got to take risk, and they could lose their money, unfortunately, Mr. Big Banks. So, a conventional loan, you're going to get a lower interest rate because you have to go qualify more, but you got to put a higher down payment. Okay, so basically you have to put a higher down, anywhere from 10 to 20%. Okay, but you'll be able to get a lower interest rate. So why do you need to know this stuff? Because whenever you're negotiating a subject to, you have to understand what kind of loan it is to figure out what your exit strategy is. But at the same time, you got to figure out, what's going to happen to the seller. Because whenever you talk to the seller for the first time over the phone, doing the Mr. Investor questionnaire forms, you're building rapport, you're gauging to see what the seller's goals are down the line, what they're trying to do now, a couple of years from now, 5 years from now. Whenever you're doing this whole transaction, or meeting the seller, talking to them, you're figuring out what they're trying to do. And at that time, you should be able to understand that the seller is going to buy another house, or if they're not. If they're going to buy another house and they have an FHA and they don't have no money down, and they have poor credit, you might have to tell them, hey, you're probably not going to be able to get another loan. So you got to kind of somewhat help the customer understand what the situation is, and that's why I'm giving you this information, okay? Because it's not about just me, it's about helping them to do what they want, and you'll get the deal. If you can't get off this seller, you'll get off the next seller, guys. And the more you're able to help people through self-education, self-improvement, the better this world's going to be, and you're always going to make money, guys, okay? I want to make as maximum amount of money as possible, but I also want to change people's lives, just like I'm trying to change your life right now, okay? You're watching me, you want to change, I'm already been there, I'm able to lend you a hand and help you up. Why do I do this? Well, in my life, I never had a mentor coach, okay? When I was growing up, okay? I had one coach, which was a wrestling coach, and he did change my life in high school, guys, because I was not on the right track, if that makes any sense, not doing the right things, and only one person ever believed in me, which is my wrestling coach, Coach Johnson. If anybody knows him, tell him, I love you, and I think about you at least once a week, and I really appreciate the faith you had into me, because that really changed my life. The wrestling changed my life. The discipline he taught me changed my life. The work ethic changed my life. Staying after practice when practice was over, coming up early, that changed my life. Those videos you allowed me to borrow, that were only the coach's videos, changed my life. So I really learned about what research is. I really learned about hard work. Thank you, Coach, because I've implemented this through working out, through businesses, through sacrifice, throughout my whole life. And there's not a week that goes by that I don't thank my coach, because if he wasn't there, I might not be where I am today. I might be in a worse path like some of my friends that I grew up with in high school, okay? And so I'm very blessed to be, Coach, that you influence me. And the reason I want to influence people is that I want to influence people financially. I want to be able to lend a hand to them and change their life, okay? And make an impact to them. So you, 5 years, 10 years, you remember that I helped you change your life, and that's what life is about, is helping another person. And of course, you gotta make money, guys. You wanna make money. Before you can help anybody, you gotta help yourself out, okay? So before I could help you out, I had to help me. And I already did the work. I already gone to the path, and I'm still going through it, guys. I'm still working for free. But I love what I do, and if you have goals, you have tunnel visions, it's not work to you anymore. You do what you do. Sometimes I come here late to do these videos, but I love it. It pumps me up, guys. And I like to surround myself with hungry people like yourself. With the hunger that you have, you're feeding into me, guys, okay? Your hunger pushes me, okay? And that's what I'm seeking from you guys. I'm not charging any money. I don't want anything from you guys besides testimonials and your success stories, because that makes me hungry. Your hunger, the harder you work, the more you tell me you work on this holiday, or you put 18 hours in, or you put 24 hours in, or you didn't go to sleep for 3 days, that pumps me up, because that's exactly what I did, you know? And sometimes I still do that today, guys. Not because I have to now, because I'm passionate about where I'm trying to go to, okay? So, in a nutshell, I talked a lot about subject 2. You guys need to go out there and make it happen for yourself, because this is America. There's no excuse, guys. Don't listen to naysayers. Work hard, and you can make it happen. See you later.